we can see here is that there's a parallel on gold that essentially connects this low, and then you briefly pierced, but then you hit it here, and then you have this high right up to this high. So in terms of where gold could be headed eventually, and I still think it's due for a short-term pullback after the massive recent move up, but if you do continue up, this 3,400 area, this trend line up here, which marks the high from here to here, which is parallel to these lows here, this would be an area that would get my attention as a more major resistance. So silver continues to be at resistance here. I am not short silver at this point. I did go long down here, and we did take profits already with commodity members here at In the Money at Verified Investing. But the point being, again, is this is resistance, but I'm not highly convicted enough or think there's reward enough to pull the trigger on a short.
In today's market breakdown, veteran trader Gareth Soloway from InTheMoneyStocks.com and Verified Investing dives into what he sees on the charts for gold, silver, equities, and yields. Gareth highlights a critical parallel trend line on gold, suggesting a long-term upside target of $3,400 to $3,450, though he expects a short-term pullback following the recent surge. Silver, meanwhile, sits at resistance. He's neutral for now after taking profits from his earlier long position. Turning to equities, Gareth notes the S&P 500 is consolidating after a sharp bounce. That pattern favors a potential short-term bullish breakout, but he cautions that a reversal could come after the next leg higher. On yields, the 10-year Treasury sits at support around 4.35%, reinforcing the idea that interest rates remain the key driver of markets in this debt-heavy economy. Now, we present the latest clips of Gareth Soloway's video. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Gold is flat to positive. We did get a small pullback. I did want to show you one interesting chart here, or one interesting parallel. So again, overall, I think gold is due for a small pullback. But one of the things that I've been kind of monitoring here, and let me just see if I can get this right on the chart, but there's kind of a parallel here that brings us to this area here, right? So if we look at this, and just bear with me as I kind of align this as best as I can. There we go. Up just a little bit like that. There we go. So what we can see here is that there's a parallel on gold that essentially connects this low, and then you briefly pierced, but then you hit it here, and then you have this high right up to this high. So in terms of where gold could be headed eventually, and I still think it's due for a short-term pullback after the massive recent move up, but if you do continue up, this 3,400 area, this trend line up here, which marks the high from here to here, which is parallel to these lows here, this would be an area that would get my attention as a more major resistance. Short term, are we due for a pullback? Yes, we are. There's no doubt. But again, we saw a short-term pullback on the daily chart basically a week ago as well, and we pulled back, and then we went to new highs. So we could do something like that again where we come into this level, maybe a little lower, but at some point, I've got to figure that gold wants to attack this upsloping parallel here and get up to that 34 to 34.50, whatever it may be at that point. It's upsloping, so it consistently moves higher. All right, next up, let's look at silver on the chart, and silver has kind of been chopping around. We had the big fall when the stock market fell, because remember, silver is generally an industrial metal now at this point. Yeah, it's a store of safety too, but it's not nearly what gold is. So it dipped sharply. Copper also dipped, all these things. And then we've rallied back. But look, high pivot to high pivot. We broke out. We retraced. First retraced after confirming is always the best support. So sure enough, it bounces there. The second hit is always a risk that it could break. It did break. It goes right down to pivot low. And where does it find itself? Now coming from the underbelly of that same line at resistance. So silver continues to be at resistance here. I am not short silver at this point. I did go long down here, and we did take profits already with commodity members here at In the Money at Verified Investing. But the point being, again, is this is resistance, but I'm not highly convicted enough or think there's reward enough to pull the trigger on a short. The S&P futures, we can see that the markets kind of had a wild ride yesterday, a little downside, then an upside, and then a late day sell back down. Now, overall, the after hours yesterday was choppy to sideways, a little bit of upside into this morning. And then we saw that news hit on Boeing here, and we took a little bit of a dive, but we are recovering. So again, the S&P is looking to open fractionally down only, not much at all. In fact, trying to nibble on the positive side. If we take a look right here, in fact, all we are down right now is 2.5 points on the S&P futures. Again, that equates to about 2.5 points on the S&P itself. Now, looking at the daily chart, we know that we have our levels, right? So on a technical analysis basis, we very clearly have this upsloping line here and this flat top from the bull market high of 2021. Now, the kicker here is that these two lines, they intersected right over here. Price fell, and that's where it found support, which makes a lot of sense, right? It was the most major level of support, and therefore, after an extended drop, the markets got a massive bounce. Now, notice what's happening. You got the big drop, you got the big bounce, and then what are we doing now? We're chopping sideways. Essentially, what this is called is consolidation. Now, consolidation, if it continues in the upper ranges, that fits with a bullish bias where you need a breakout of this trend line. So again, as long as we continue sideways like this for a couple days, you would actually favor a bullish move to the upside, which would take us up to this level. And remember, technical analysis is all about probabilities. And so when I talk about bias, it's probability based. It means it favors that direction. And in this case, the S&P as of now is favoring a sideways chop, which is bullish after a big move up. And then again, you would expect one more move up. Now, after we get that move up, I would start turning my attention to the downside of the market. But at least in the near term, again, I would favor that upside. You got to lure more bulls onto the side of being long before the markets have enough energy to head back lower. Okay. If we do head back lower, or when we do, we want to watch this level. This level is going to be support again, but if it breaks, watch out below. You're likely headed down to this area on the ES. That's around 4,600 on the S&P 500, which will be your next major technical support. Now, with the quieter market, what do we know is likely going on with the US dollar and the 10-year yield? All right. If I just said to you guys, all right, the yield is flattish on the day, what do you think the markets are likely doing? You would probably say, and you'd be correct if you said, oh, well, the markets are probably flat, because we know the 10-year yield has been driving the markets up or down depending on which direction it's going. So if we flip back and we take a look at the 10-year yield, look at this, about as flat as can be. Now, yesterday, I talked about this level as being support. When we were trading up here, I said, guys, this level here at around 4.35 is going to be technical support. And again, notice why. High pivot, and this flat top area. We broke above it. We confirmed. Therefore, this level now becomes support on the 10-year. Now, it's not to say that it can't break. It's just you have to understand that when it retraces, this tends to be support. Now, if yields start moving up, what direction do you think the markets would go? The answer is to the downside, right? We would expect the markets to go inverse to the 10-year yield. And if the yields fall, markets continue or should continue to rally. So again, if we're continuing to expect a potential move up in the markets, it would imply maybe we get a small little sideways consolidation and then maybe one more dip in the yields, and then we'll have to keep an eye on that. The dollar today is flat as well. And again, with the markets flat, the dollar should be flat. The 10-year yield should be around the flat line. And again, that's exactly what we're seeing right now. Now, listen, we are coming into earnings season, so we have to be fully aware that on individual days, the 10-year yield may not mean anything, or the dollar may not mean anything. For instance, if Apple reports earnings, or NVIDIA, or Google, or Amazon, if these companies report and it's shockingly bad or good, the markets could have a reprieve from being tied to the inverse of the 10-year yield. But again, it would be short-lived, as ultimately the focus will turn back around to the 10-year yield, because again, it's all about debt, right? We live in an economy that is laden with debt, from the individual and credit card and mortgage debt all the way up to the government, which has trillions and trillions and trillions in debt. And we know 9 trillion has to be refinanced this year alone of the US debt. So that means that interest rates really mean a lot in terms of the short-term moves in the market.
Wrapping up, Gareth points out that while earnings season can temporarily shift market direction, the real driver continues to be interest rates and the 10-year yield. As $9 trillion in U.S. debt needs to be refinanced in 2025, rate sensitivity will stay front and center. If yields fall, expect equities to push higher. But a break below support on yields or failure to rally in risk assets could spell trouble. Markets are at a critical inflection point. Stay nimble. Stay focused. Share your thoughts on Gareth Soloway's analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.